Hello there, welcome back to this session. In this class, we're going to discuss about major and minor trends. Okay, so when we talk about trend, we are simply talking about the market direction. Okay, so the markets may either be going up or it may be going down. Okay, so market trend. So the markets may either be going up or it may be going down. Okay, so that is trend. All right. So talking about the major and the minor trend. The major trend is the as the name implies, it is the main trend. And the minor trend is also known as retracement or pullbacks, or as the name implies, it is a minor trend. So you must have heard the term most times. Traders will always tell you that the trend is your friend. So meaning that in all you do, make sure you stick to the direction of the major trend. Okay, because if you are trading in the direction of the major trend, your chances of making positive trades or getting positive outcomes out of every trade you are going to take will be very high because of the direction of the trend, either an uptrend or a downtrend. Okay, so for example now, let's say this is our major trend, and then suddenly okay, so this is our major trend, this is the pullback phase, and then this is the continuation of the trend. Okay, so this is our major trend. This is the minor trend. Okay, hope this concept is clearly understood, please. So for for uptrend, so if this is an uptrend, um, let's look at a downtrend situation. Okay, the market is going down. Okay, now this is a downtrend. This is the pullback phase, and this is the continuation of the downtrend. Are you getting it? So this is the major trend, major trend, and this is the minor trend. This is the minor trend. Okay, minor trend. All right. So the trend is simply showing us the direction of the trend. Okay, so that means if the market is going up like this, you are supposed to find a way to trade with the uptrend. So in a situation where you now see maybe a small pullback like this, okay, you can expect maybe the market may get support from this particular level here and continue to go up. Okay, so this is the reason why you have to trade in the direction of the market trend. Okay, so we are having seen this major and minor trend. I think let's open a real chart and see. Okay, so the trend can either be going up or it can either be going down like this. Okay, so let's look at a real chart and analyze. Okay, so first of all, once you open your chart, you try to zoom in first. If you zoom in, it will give you an idea of the direction of the major trend. So if you look at this situation, you will see that the major trend is an uptrend here. Okay, you can see that the market is going up from this level. Okay, so having seen this situation, you zoom out. Okay, so if you look carefully now, this is what we are talking about, major and minor trends. This is the major trend. You can see the market is going up. Then at this particular time, the market dropped a little bit. So in this situation, it is called a minor trend. Now you see what I was trying to draw on that plain board. You can see that it got support from this particular level here like this, and then it moved like this. You can see how the market moved. Okay, it goes up, got support like this, minor trend, and then it shoots up again. So you can see what I was trying to explain. Okay, so this is the major trend. Let me repeat again. The entire of this area is the major trend. Okay, at this point in time, this is the minor trend. This one is also a minor trend. Okay, all the pullbacks or the retracements, they are called minor trends. So if the market, you already know that the market is going up. Okay, so at any point in time, the market can retrace. It can get support from any of the previous levels and continue it to push higher. So as you can see in this situation, the market got support from this level. The market got support from this particular level here. Okay, it got support and it moved up. Okay, so you can see this is the minor trend. It shoots up again and then it came back to the same level, knowing fully well that it is an uptrend. From this particular level, you can open a trend for a upside and you can see that you are going to be in profit. You see why it is we always say the trend is your friend. You should always open trade in the direction of the trend using confirmations, and these are your confirmation. This support level here like this, the entire of this area is your support level. So you can see that the market hits the level, it goes up, hits the level again, and then it shoots up. Okay, so you can see clearly. So you can see that it is an uptrend. So any downward movement is a retracement or a minor trend or a pullback phase. Okay, any downward trend you see is called a retracement phase or pullback. Retracement, like the market retraces, it drops because the market doesn't move in a straight line like this. It moves in waves like this. This is how the market moves. It doesn't move in a straight line. Okay, so the market retraces, or pull back. All this is what we refer to as a minor trend. Okay, so this is for an uptrend situation. Let's see if we can find a situation in a downtrend. I need a major, let me look for a major key downtrend I can use to explain. Okay, I've seen a major downtrend. So if you look at this chart carefully, from this particular level, we can say that the major trend is a downtrend like this. As you can see, it is a downtrend. By the time you zoom out properly like this, you'll be able to see the trend clearly. Once you have seen the trend clearly, then you zoom in, okay, to check the current chart. Now, having known that it is a downtrend, the market moves in waves. It goes down. You can see it got support like this from this level and then continue to push down. You can see some similar situation that I drew earlier on. So some of these retracement now are where we discovered patterns. Bullish flag, bearish flag, like I explained. So if you look at this carefully now, this look like a bearish flag. Okay. After the breakout of this particular level here, the markets push down. Okay, but we're not talking about that for now, Dosha. I've already explained those ones already, so I'm just refreshing your mind. So you can see that this is a downtrend market. So even if you see in a downtrend, you see retracements like this or pullbacks like this, it doesn't mean that the market wants to start going up like this. Okay, it may still follow its downtrend. You can see it got support from that area. Look at this, is a support level. After it broke the level and then it continued to push down. Okay, so the market can get support from any level and continue in its direction. So you can see this is a downtrend, despite the fact that we saw small retracement at this particular time. At this particular point in time, there was a slight retracement. That is, the market moved up in this situation, but at the end of the day, it followed the major trend, which is a downtrend. Okay, so these are just the concept of major and minor trends, please. So it's not something you should confuse yourself about. It is a very simple terminology. Okay, it is very, very simple. The major trend is, like I started, is the main trend. So if you are on a real market chart now, you should follow the direction. Like this is an uptrend now, so you always trade in the direction of the trend. If the trend wants to change, it is going to give you some idea or some concept or some signals. You may see something that look like a double top. Okay, you may see something that will look like a double top or an M pattern like this. After breakout of this neckline, you can see that the market will continue to move down. Okay, this is a double top. This is an M pattern. It may give you such a signal. If it is a downtrend, it may give you a double bottom pattern like a W. Okay, this is the double bottom. This is the neckline. After breakout, you can see that the markets continue to move up. It is going to give you ideas, or the market may start to range. It may start to fluctuate or make weak candles like this after a strong uptrend. Okay, then maybe you can wait for a breakout of this downtrend and then wait for a pullback, then confirm your downtrend market. You can see that the direction of this is how the market changes its direction. Like in this situation now, I'm looking at a slight change in market direction. If I draw the trend line like this, you can see that the market, is going up like this, and then it goes down, and then it goes up again, and then it goes down, up. So you can see in this situation, the market is changing its direction. Okay, it is changing its direction. Okay, so if you draw properly like this, so you can see that the market is going down like this. You can see. So you can see that the market wants to change direction. This is how market gives idea on how to change its direction if the market wants to change its direction. But for the meantime, it may also be a pullback. Okay, because if you look carefully, you pay attention to every detail. If you look carefully, there is a level here. This is a weak area where this market, where this buyers, this particular candle got rejection from. This particular bearish candlestick. So there is every probability that this particular candle here, the market may reverse, or it may give us one bullish candle, it may close as a bullish candle and continue to move in its uptrend like that. Okay, and you can see that the market closed exactly at the level but with a lower rejection. So the market may continue to go down. You can see the market is now going down proper. So you can see that the market has changed its direction. Okay, so you can see. So if I look carefully, this may look, I may consider this to be a double top pattern. Okay, this may look like a double top pattern because at this particular point in time, the market changed direction. Okay, this may look like a double top. Okay, you can see the market goes up like this, and when it got to that level, it goes down like this, and then like this. So you can see after breakout of this particular level, the market shoots down like this. All right, so these are the concepts of uptrend, downtrend, the major trend, the minor trend. Okay, major trend and minor trend. And you can see now that the market, you can see how I'm explaining, the market is now changing its direction after going up for a very long period of time. You can see now that the market is now going down. Okay, the market can get change direction from any particular area. You can see here there is a strong level of support here initially. So you can see from this level the market was getting support. You can see. So it may get support from here and go, or it may break and continue to go down. Okay, because if you look at the support area, the market has used the level several times. So if we see any strong bearish candlesticks, but this particular sellers are not that strong, so the market may continue to follow its uptrend again. Okay, if we are seeing strong sellers like this going down, they may just break the level and continue to go down. Okay, but in this chart we are seeing buyers in between. We are seeing buyers, we are seeing doji candlesticks, spinning tops in between. You can see buyers, and here we are seeing two buyers. Now we are seeing strong pullbacks from the area, so it may follow its uptrend in when it gets to this support level. Okay, but now we are seeing a strong bearish candlestick. It may also break the level. So this is how you analyze the market. Okay, this is how you analyze the market. So these are the concepts of major and minor trends. So let's look at some charts, some trades that I took. So this class is supposed to explain to you major trend and minor trend. Okay, and as a bonus tip, I'll open some, I think just 2-3, because this is not the first video I made. So the first video I lost it by mistake, so this is just the second video. So I was trying to look out for the chart, the market history, because the market was on Thursday. That was on Thursday. So I checked through the history. I could only figure out 2 of those trades, but they are very, very good. So with that alone, we can use that to explain how I opened those positions. So let's look at those trades. So this is Euro JPY pair. Okay, now this market was strongly going up. We saw one seller entered at that area and then a strong bullish candlestick. It got support from that area and then the sellers pushed the market down. So I waited for the market to get to this particular area. Again, this particular resistance that I drew. Okay, so with confirmation, I will open a position in a downtrend for at least a minute. Okay, so look at the chart very well. This is an uptrend. The market hit that level, rejected and pushed down again. We saw those strong sellers entered, right? Now, if you look at this chart, this is not a strong uptrend, okay? But at this particular time, the market started making good bullish candlestick. But what I'm looking at on this market is this resistance here. This particular resistance is what I'm looking at for. So if the market, so I can see I drew a trend line there, sorry, a horizontal line there to indicate. So as the market hits this particular area here, I switched to 5 seconds. So like I tell you, the trade, your candle should be on 1 minute first of all. You can see this on 1 minute. This is 1 minute candlestick. That means every candlestick here is formed within 1 minute, just 1 minute. Okay. So you click this particular button here and change it to 5 seconds so that you can get a confirmation entry. So after changing it to 5 seconds, okay, you can see now that the time here is now 5 seconds. Here, you can see it is 5 seconds. So you click that area, change it to 5 seconds, and it means every candlestick here is formed within the next 5 seconds. Every candlestick. So you can see as the market was going up, this was our, on a 1 minute chart, this was our resistance level. You can see this is the resistance level. This level is the level of resistance. So I was looking for the market to hit that particular level and then look for a confirmation to go with the sellers if it is possible. Okay. Now, after the market hit this level on 5 second chart, I saw this strong bearish candlestick. And which is also an engulfing candle. But before I saw those bearish candlestick, you can see that the market started getting rejection from above, forming weak bullish candlestick. You can see those rejections from above. And then eventually I saw an engulfing candlestick. So the pattern is the pattern that look like this. This is a bullish candlestick. This is a bullish candlestick with a rejection from above, okay, a wick, and then an engulfing, a bearish engulfing candlestick, you can see. So this is a reversal pattern in the market. This is a reversal pattern. So if you are seeing this pattern in an uptrend, please, if you see this pattern in an uptrend, you can go with at a strong level of resistance. After seeing this bearish engulfing pattern, you can open a position for downtrend, and you can see that from there the market pushed down. You can see it pushed down. You can see clearly. Alright, so that was what I did here. So this was the engulfing candlestick. Let me zoom out again. So you can see this was the engulfing candlestick. You can see the pattern. You can see a bearish engulfing candlestick, and you can see that the market pushed down. Okay. So that was one of the trades. So let's see the other one. So look at the next trade was USD JPY. Similar scenario. I saw the market was also going up. We saw one retracement candle here, strong buyers, and then the market shoot down. Then this is the resistance level we drew. So we're waiting for the market to go up again. Okay. Then we can try to open a position for at least one candlestick for 1 minute. So you can see that it is on a 1 minute time frame. Okay, you can see that the time is 1 minute. So what are you going to do in this situation? We are already seeing a resistance, similar situation to that one. We can see that the sellers entered from here. You can see strong sellers using this level as a level of resistance. So we can wait for the market to get to that level again. With confirmation, go open a trade with the seller. So look at the next, and now you remember to change it from 1 minute. After you'll be looking at the 1 minute candlestick. Just like I've already explained this strategy already, I'm still trying to explain it for you again. In our previous lessons or class, I showed you this strategy and I asked you to continue to practice it, right? Okay, so you can see this is 5 seconds. I switched it to 5 seconds chart. Okay, now on 5 seconds chart, I saw a breakout candlestick. So the market broke the level, a strong bullish breakout. Look at it. This is a breakout candlestick. This is our resistance level. Okay, so this bullish candlestick broke the level, right? But after seeing a breakout candlestick, a Marubozu candlestick, which is also a reversal pattern, this is a breakout candlestick. It is a Marubozu candlestick, but I didn't open the trade directly. I waited to see if the market will continue to go up or if it is going to go down. So I saw an inverted hammer, which is my first confirmation. I saw an inverted hammer after seeing this strong bullish candlestick. The market tried to go up, it goes down again, close as an inverted hammer. Okay, which is also a reversal sign at the level, a strong resistance level. Then I didn't open my trade immediately until I waited for another strong bearish candlestick. I saw this bearish candlestick without any lower rejection or wick. Okay, so I opened on this candlestick and you can see the market shoot down, because majority of the time, about over 70% of the time, on 1 minute candlestick, sometimes the market used to make fake breakouts on 1 minute. This is not a major breakout per se. This is just a minor breakout, a situation where the market may be moving like this. Okay, like this. This is a level, right? Let's say this is our resistance level. Okay, then suddenly we saw a strong breakout of the level. Okay, and knowing fully well that at this particular level there is a strong resistance from behind. Okay, so we can expect at least for one candlestick the market should respect the level. Okay, so after seeing such breakout, after seeing that breakout, I saw an inverted hammer candlestick like this. Okay, then again I waited for another candlestick to form, confirming the entire of this scenario. Confirmed me now that the market wants to go down. Okay, a Marubozu candlestick, an inverted hammer candlestick, and then a strong bearish candlestick followed. And I tell you that over 70% of the time, in situations like this, market used to make fake breakouts for one candlestick. So for one candlestick, the market may try to respect the level or reverse before it will continue to move in its uptrend, or it may make a complete reversal. So if you are seeing this confirmation, I opened a position there and it was a winning trade. Okay, so you can see the reversal candlesticks, how they work at strong levels of resistance. So on that note, we are going to end this session here. Okay, so if you have further questions, you can message me and let's see how we can continue to make progress. Peace. Take care.